Welcome back to the channel, everyone. Today, CNBC are trying to force us apes to sell our shares, saying that they would almost certainly be selling right here. Trust me guys, you do not want to miss this video, so stay tuned and let's make some money. But guys, before I dive into the video, I just want to give a massive shout out to the 1,500 of you that have currently dinged that notification bell, because you guys are always the first to watch a new video as soon as it's released. So guys, be sure to drop a like down below, subscribe to the channel and ding that notification bell if you haven't already, so that you don't miss another video just like this one. And now I want to dive straight in with the key information. So, let's hear what they have to say.
Welcome to Trading Nation, I'm Seema Modi. The Reddit army is back at it again. Check out AMC's blockbuster move. The stock rebounding Thursday, up more than 3%, still down more than 25% this week. Let's break it down with Trading Nation team JC O'Hare of MKM Partners and Michael Binger of Gradient Investments. And JC, you still feel that there is additional downside. Tell us why.
I do. This stock is not easy. I mean, This has been a wild ride for sure. But when you look at this stock, I think it's pretty important to look at how it acted at the beginning of this year. Over the first few months of this year, it consolidated, and then we saw this monster breakout. The stock ran from $10 to $70. Then in June, we saw another round of consolidation. But what was different this time is we actually saw the stock break down. Now, where can it go? I still feel it's going lower because I don't think the selling has fully finished, right? The last seller has not sold yet. And one thing I'm looking at is volume. When we have major fear and greed and supply and demand imbalances in the market, you will get a pretty darn good picture at tops and bottoms from spikes in volume. And you could see, back in June when the stock made its high, we had capitulatory greed volume. Now, on the other hand, I'm looking for a volume spike to show me fear is tangible. So I still think we're going lower. My gut says we need to see another round of strong volume, and that to me will signal the end of the downside.
Michael, you could argue that AMC has been opportunistic, taking advantage of this momentum in the company's stock, this sort of cohort of traders that have bid up shares of AMC by selling more stock, right? Question is what they're going to do with it. But where do you stand on shares of AMC? Buy, sell, or hold?
Well, I would not be a buyer for sure, and if I owned it, I would sell it right here. I totally agree with JC. Frankly, I wouldn't be in any of these Reddit or meme stocks. I feel all of these stocks have risen more on short seller manipulation and technicals versus anything going on fundamentally. AMC in particular, shorts were in AMC for a reason. Their business model has been attacked for a long time. From internet streaming networks, Disney Plus, Peacock, Paramount. And even for a longer time, Netflix and Amazon. The company has not made money in the past 3 years, and they're not forecast to make money in the next 3 years. And, you're right. The company looks to take advantage of any of these pops in the stock to dilute shareholders further so they can shore up their over-leveraged balance sheet and the lack of cash flow. Bottom line, just stay away from this thing unless you're a purely speculative day trader.
Okay, you heard it there. Michael and JC, great to see you both. And thank you all for watching Trading Nation. I'm Seema Modi. Take care.
The first thing I wanted to point out is just how obviously manipulated this AMC price chart is. Stocks go up and they go down. Stocks never perfectly stair-step down in a perfect 45-degree manner. It just never happens naturally. Clearly the hedgies are using their algos to manipulate the AMC price downwards in a perfect motion. The apes are buying the stock, we're not selling. Therefore, they're forcibly pressuring it downwards by routing our orders through a dark pool and routing their sell orders directly into the market at evenly spaced intervals. I do partially agree with one thing that the first guy said, which is that a spike in volume will mark the end of the downtrend for AMC. When all the volume returns back into AMC, when the shorts have to cover, the short squeeze will commence. We know it's only a matter of time before those shorts have to cover their positions. All of the failures to deliver, the synthetic shorts, and everything else that's been going on over the last few weeks and the last few months. When that time comes, the shorts will have to cover their positions by buying the AMC stock. That will cause a rocket in volume and therefore a rocket in the AMC price, enacting that short squeeze that we're all waiting for. I did find it funny when this guy said that if he had AMC shares, he'd be selling them right now. Because it just doesn't make sense. If we didn't sell at $70, why on earth would we be selling now at $30 to $35? especially when we've done the due diligence and the research, and it's just a matter of time until the shorts have to cover. It wouldn't surprise me if this gradient investments firm is currently short AMC and massively panicking because they've suffered giant losses. Yes, you could say that the AMC price has been falling, so the shorts could cover their positions, but don't forget, to make the AMC price fall, they've had to exponentially increase their short positions, and if they covered all of them, the squeeze would still happen. That's like saying a fund could cover their 10 shares at $70 per share and take a pretty big loss. But now down at $30, they'll be having to cover, say, 60 shares. Even though the price is lower, they've got so many more shorts to cover, which are just going to amplify those losses. We know from the dark pool data on stock grid for AMC that the shorts have been increasing their position on a daily basis. They've only spent 3 days covering their shorts. Every other day for the last few weeks and the last month, they've been adding to their short position. Back here, the shorts only had a few $100 million worth of shorts to cover. Now we know that there's multiple billions worth of shorts that need to be covered. It also annoyed me when he said that AMC takes advantage of any pops in the stock to issue more shares, especially when Aron has literally just cancelled a new issue of 25 million shares because he's on the APES side. Clearly, they're not just diluting the AMC shareholders, issuing more stock whenever possible. They're doing quite the opposite. I also wanted to give a quick update on the Wes Christian investigation. As you can see, there was a GoFundMe set up by Chad himself, and it's already been fully funded. $100,000 has already been raised. Some of you may have noticed the huge amount of returned shares on Ortex for today. The post says they haven't covered anything, but what they did do was return most of the 6 million shares they borrowed throughout this week and never shorted, so that it appears as though they did. T+2, and throughout the week, price action has not shown a price action worthy of 6 million shares bought. Another poster speculated that the hedgies have been buying the shares on the dark pool and selling them on the lit exchanges. Technically, the hedgie doesn't even need to borrow the shares at all to short, but it's a safer bet in case the price jumps while they're shorting, as they can continue to hold on to those borrowed and shorted shares for 1% per year until the price drops enough to just replace them at a gain. If they bought 6 million shares on lit exchanges, you would know. I've not forgotten that they can short through the dark pool, but they would hurt themselves to do so, as the dark pool does not count towards the price on lit exchanges. They buy through the dark pool and short through the exchange. This is how we're seeing the AMC stock price fall day after day after day after day, but supposedly shares have been returned today. T+2 would have made that Wednesday. Again, it's so unfair that there's one rule for them and another rule for us. That they can buy shares on the dark pool without impacting our price and then sell the shares on the lit exchanges, knocking the AMC price down. But at the same time, that actually has a finite cap. Don't forget, if they're buying them on the dark pool and then selling them to us on lit exchanges, we're just going to collect more and more of the float. We can't actually sell shares into the dark pool, and therefore there's only a finite supply of shares in the dark pool for them to buy and then sell back to us. It wouldn't surprise me if APES are getting close to owning 100% of the float, not counting synthetic shares and failed to delivers and all the other rubbish out there at the moment. I don't think it will be long until they run out of shares in the dark pool to continue shorting, and they can't keep this synthetic game up forever. Let me know down in the comments below what you think about CNBC trying to force the APES to sell their shares. Clearly, they just want us to sell the shares to the hedgies so they can short more shares, or they can buy them from us because they're running out of volume in the dark pool. Also, guys, if you want to pick up some shares in AMC, but you haven't even yet signed up to a trading platform yet, be sure to check out the links down in the description below to Webull if you're in the US and Free Trade if you're in the UK to get some free shares with very low minimum deposits. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.